Good afternoon, everybody. Welcome to the first of our non-farm payroll economic numbers live with myself and Piers Buckworth from Apex Alpha. We got the Apex Alpha army in. And we also have Monkey Man, we've got Julian, we've got Wing It, Friar Tuck. Welcome to you all. Yes, we've got about 90 seconds to go. Piers, what are you expecting this number to be?
What a question that is. I mean, this is, out of all the numbers that is a zero clue scenario, this has got to be right up there. I mean, that whisper number, which of course is just a whisper number that knocks around a lot, but it's notable at minus 175k. Given the fact the consensus is 50k plus. And as you and I were discussing off air, I don't recall seeing such a disparity since maybe 2008, as you mentioned.
Take us through what a whisper number is with 1 minute to go.
Yeah, well, I mean, listen, it's a kind of the non-farm payrolls version of, I mean, there's a whisper when it comes to a data point, whether it be macro or whether it be earnings. There's often, specifically with regard to macro data, there's often, what the market really thinks, what the trading desks are really saying to each other. And what it does is it just gives the market that little bit of extra cushion, if you will.
No, so guys are going to keep that up. We see the number on the right-hand side. 55,000 was the expectation, right? And sorry, this 50,000 here is the expectation. Yeah. This box is the one that you're looking for, as well as the unemployment rate. Unemployment rate expected to come in at 4.5, 4.6.
Yep.
Then we've got average hourly earnings. Now, just be careful because you've got October and November numbers coming out for the non-farm payrolls. So correct. Here we are in 3, 2, 1. Let's see as they hit the tape, what is the market reaction going to be?
What's the number? There we go.
Unemployment rate 4.6. That's on the high side, people. That is higher than expected. Still waiting for non-farms to come through.
That's interesting, but
with the average hourly earnings, but that 4.6 does seem high.
Yeah, well, let's find out what the rest of this data is like. I mean, there's so much to digest. Why haven't it was a bit strange that which one I said it's a here we go. I've got the number here, mate. 60. All right, here's the number.
64,000 for the November.
So there we go. 64,000 versus 50,000. Where unemployment rate 4.6 versus 4.5, and the average hourly earnings plus 0.1 versus plus 0.3, which is on the low side, which is probably a positive thing. I would say that that's going to be taken pretty positively by the market, all that stuff.
There's your negative number. It was the October one that the whisper was accurate about, down 105,000 because of the shutdown.
Yep.
Does the 64 negate that negative?
Yeah. Well, first of all, I think that if you take that all into consideration, what we've just seen, I need to go through some of the other numbers as well, like the underemployment rate, U6. So the U6, U3 spread, which indicates slack in the in the jobs market. There's another one, but at a headline level, those numbers I think are going to be relatively well absorbed. I can't. What are the futures?
U6 unemployment 8.7 from 8% last seen.
There we go. Well, that's and that spread. That means the spread has widened, which means there's more slack, which is a positive thing.
Right. So let's have a look at the market reaction then. What are we seeing? We're seeing the Nasdaq higher.
Yep.
First instance, now up 11 basis points on the day. It had been as low as down 1% this morning on the European Open.
Yep.
The S&P 500 trading up 16 basis points. Gold has moved higher, 4308. That makes me very happy because I have a call option on that today from 4280, which is going to be printing some blue as we move on, if that's held. Why is that? Why are we seeing...
Well, first of all, what's the 10-year done? I can't see that right now.
Right, let's get that for you. 10-year.
Bond market will tell you what is going on, kind of.
Right, there we go. 10-year, and you will get the intraday dip. There's the intraday dip, as you can see. Bond price is going higher, which means yields are going
lower. So there we go. I mean, and that's first of all, I'd say one thing is the first move is always wrong in the professional world, and that is amazing how many times that rings true. And what I mean by that, viewers who aren't familiar with that terminology, is that on a professional trading desk, the amount of times that the first move you see, whether in the bond market or the Nasdaq, the big macro instruments is more often than not the wrong move. Listen, there's a lot to digest here, mate, and it's going to be it's not going to be done in the first 5 minutes. The initial reaction is positive. Yields have gone down, bonds have gone, prices have gone up, Nasdaq's gone up. Gold and silver have rallied, obviously, with the slightly lower rate implication. But and you know, if you look at the numbers that just the headline numbers that came out, as backward looking and distorted as they may be, they were actually pretty solid. The headline number was solid. That negative number was accounted for, and then as you said, that underemployment number had ticked up by 70 basis points, which indicates a bit more slack in the economy, which is ultimately usually seen during a recovery. So if I had to just throw everything, and bearing in mind I'm looking at screens and sitting here in a studio and not being able to study what's going on here and actually see the ticks, I would say that everything that we just saw is and are seeing is a relatively market-friendly outcome.
Well, and definitely equities taking it that way at the moment. Should equities be celebrating a higher unemployment rate?
Depends how much higher, mate. I mean, it's
so 4.6,
4.7 versus what was the expectation again for that?
4.6 versus it was 4.4% last seen.
Yeah. So the answer is yes, because the labour market is meant to be slowing down. We all know it's slowing down. It's all about the speed at which it slows down, and if that's accompanied by a ticks down in inflation. If you look at the average hourly earnings, they were down, which is obviously critical as the critical input into the core Fed PCE number. So the way I see that is that we've got a lower inflation indication, we've got a slightly weaker labour market, and net, we just dodged a bullet.
Right, David helping us here. He's saying that cable just printed 134. Is that still? Yes, 134.33 on GBP against the dollar. You see the dollar basket took a leg down initially. It's now rallied back to unchanged. So where is that coming from? The dollar yen, 154.75. That's exactly where it was this morning.
Yeah, well, I mean, and there we go. Listen, the currency markets net have barely moved, right? So, I think that there's a lot to digest here, but one thing is for certain: we have avoided a disaster. Those of you or anyone who thought that we were going to have some shocking print that was going to move the market dramatically, incorrect. It's been massaged. And listen, the markets sometimes, particularly in this environment, take 24 hours to digest what's going on. We might not see into what the market really thinks until tomorrow. But my view is that that's all pretty market friendly at this point.
Which is exactly why volatility is coming off. Volatility, less fear post that number.
Yeah, exactly. So yeah, there it is. I mean, that's once again, you know, how many times do we have this conversation when we look at the data and it's kind of Goldilocks, and it's, you know, it's becoming gold. It's not quite as Goldilocks as it has been, but Goldilocks has been the name of the game for as long as I can remember.
Right, Piers, I have puts this afternoon for 6,800, sorry, for tomorrow. They expire tomorrow.
Yeah.
6,800 puts and 6,780. Keep them or get rid. Not financial advice. Just from print to print.
In the S&P 500.
S&P 500, 6,800 puts expiring tomorrow.
Yeah.
I'm tempted to get rid of one and keep one.
I would keep a small one.
Okay, let's keep the.
I'd keep a small one.
6780.
Put it this way, I've got a QQQ short on my book, and I'm keeping it on, but at this stage anyway.
And that would be right, because we can see the Nasdaq has printed higher, but straight away started.
Listen,
to come off the highs.
I think that there's a lot of fanfare and there's a lot of emphasis put on this labour market data, and it happens every month. But in reality, this is just a high-frequency set of data, most of which is very convoluted and backward-looking, and the market's probably going to do what the market's going to do, unless there's a shock. And what's the market doing? The market is rotating at the moment. And I will be surprised to see that continue, because, by the way, this gives somewhat of a green light to what was already happening, which was small caps and consumer plays.
So we're going to go through that later. In about 15 minutes, we're going to go through the exact update of everything that's going on in the market right now. But Piers Buckworth, the market has sold off. You can see there on screen. This is a 2-week chart, right? We were at 6,900 and we bottomed this morning overnight, 6,780. Was that a little bit of a layup? that you had that buffer because it had already come off going into this print?
Yes and no, because we rallied almost 1% off the lows from the Nasdaq this morning, so we went into this print flat. So it had already done a lot of work and then has pushed through that print mildly. So yes and no. I just don't think the moves are remotely dramatic enough for us to say that anything's really happened with any conviction, quite frankly.
So yeah, undecided.
Yeah, I listen. The market's very confused. It's not confused about one thing. It's very clear what's going on out there. Look at the rotation. Look at the price action yesterday in the unprofitable parts of the market and the crowded parts of the market and the AI trade. We'll talk about Oracle and OpenAI and leverage in a minute. But go and have a look at the retail names, have a look at Target, have a look at the apparel names, and just have a look where the market is. Like they're just rock solid. And bearing in mind, these companies have been some of the biggest short, they're some of the best shorts for years and years and years. So it's fascinating to see what's strong and what's not strong right now.
David's saying, I think the size of the revision to October is clearly a mini warning sign that accuracy just isn't available.
Yeah.
If you take the 2 months together, so the minus 105 and plus 64, probably feels about right, doesn't it? Where
So hang on, is that the retail sales number that's just come out?
retail sales has, and that control group,
Well, there we go. Well, that's a
strong number.
That's a big number. I mean,
Yeah.
and that, by the way, guys, listen, macro data, if you broke it down its importance, retail sales is right up there in terms of importance. So that's interesting. And you throw that into the mix of what we've just seen, which is a slightly deflationary indication with a very strong retail print, that will just feed into what I've just said, I would imagine. Net, this is a good set of data for the market.
Yeah, and that we'll see add into that rotation, no doubt, which
Correct,
we'll touch on in exactly 10 minutes' time. But ex autos, you can see the headline retail sales month on month is actually a miss at 0.0, but that's from the autos adjustment. If you X out the autos, then it's 0.4% month on month, and the control group, which is sometimes a better number, 0.8. That's big.
Yeah, it's a very big number. I'm mildly surprised to see it that big, if I'm honest with you, mate, because some of the retail sales channel checks going into this print were not great in the US and in the UK. So interesting number. And you know, if you get a strong retail sales number with a lower wage number and an okay headline number and an okay underemployment number, you know, bearing in mind we're threading the needle here a little bit, that's all pretty good stuff.
Talking about earnings there, average hourly earnings you're comfortable with, 3.7, slightly lower than expected.
Yeah.
The November number, 0.2 lower than expected.
Yeah. Well, yeah, I mean, listen, that wage inflation, of course, which is what we want to see under control. We don't want to see those numbers ticking up. We want to see those numbers flat or slightly down. So again, that's pretty market friendly as well.
Dare I say Goldilocks?
Well, that's what I was saying before. Listen, Goldilocks, sometimes it screams Goldilocks. But again, listen, it's not hard not to summarize what we're seeing here as Goldilocks, right? And that is exactly what the market loves.
Right, anything to do trading wise, I'm tempted, having seen the market pop up.
Yeah.
And now it's come back. I'm tempted to have a little nibble.
Yeah, listen, I'm just quite happy to keep. I mean, listen, I'm keeping this QQQ short on because I've got no faith whatsoever in the fact that that's going to rally hard. But there's a few things. I mean, listen, are we talking macro products or are we talking stocks here?
Well, first of all, seeing cable at 134.20 up from 130.180 going into the budget. I'm going to sell some cable because naturally we're long it, living in this country.
Yep.
Well, some more than others.
Yeah. Classic, mate.
So then you look at cable's come a long way. That would, where you can see it, the FTSE down 76 basis points because of that point exactly.
Yeah.
Some of it catch up from yesterday, some of it, fresh, and it outperformed the last couple of days when that rotation was going into value. Oil has been an absolute shocker.
Yeah, well, oil's struggling with a few things. Well, hang on. Just keep an eye on this puppy. Yeah, so oil is difficult at the best of times, and I gave up trading it quite some time ago because it's just impossible to have a real grip on it. I know one thing for sure, and that is the US, who are the swing producer and have been for quite some time, who are not, who live in their own universe and completely outside OPEC nonsense, have a pretty significant impact on the market in terms of on their ability to keep it flowing. And then, of course, we have, what's oil prices doing right now? Sorry.
Oil price is 55.75, down 1.7% today. I am just going to take some money on this gold call that I have, because if we're seeing that dollar turn around, that gave us a nice uptick. So that's a quick $300 that we've made since this morning. I'm going to take, we're at $25 a point. I'm going to take 15 of that off and take the money on that. Run $10 a point. It's tough to tell the way that the dollar is going to continue on this afternoon, because as we say, it's Goldilocks, and it's not as if any of the other currencies can boast that they are.
No, and the dollar's a bit of a headache as well, right? I mean, it's and Pfizer just out with some really interesting news. Dollar's been on.
Got to that.
Sorry, yeah. Well, I mean, Pfizer have just come out saying that they expect to begin obesity drug trials within the next year, which is exactly what the market wants to hear. They also reported earnings about 2 hours ago, and it was actually tepid because it was ultimately it was kind of, they lowered their guidance mildly, but it was due to COVID. The rest of the business is on track. It was a very mild, but the stock was down 2.5% pre-market, and then it was now it's up 80 basis points. So it's good price action on top of very good price action that's been building in this stock and in the space for obvious reasons due to the rotation, etc. If you look at the chart, it's really building very nicely, but this will probably be well received by the market. I actually sold my Pfizer before I came into this meeting, which has given my my Apex army, no doubt, a wonderful little boost there.
Little laugh.
Well, no,
Did you tell them all as well?
Yeah, that's not the point. I would imagine loads of them have this stock, from an educational perspective.
Well, it's been a great call. So you pushed this to me mid-October when this stock was trading at 24, because I remember I bought it on air, and it's now 26.35. So that's been a 10%, while the rest of the market
has been
you've seen down 20.
Yeah, I mean, and some of the higher quality pharmaceutical companies have done a lot better. Look at Roche, look at in Europe, look at Roche, look at AstraZeneca, look at Amgen, look at any of but Pfizer's a bit of a recovery story. But the price action has improved significantly. I'm going to buy it back. I just wanted to lock in some gains prior to coming into here, because my book has been under assault over the last 24 hours.
Take us through that, because everybody goes through it.
Yeah.
And it's a painful experience, and you've got to act pretty quickly.
Yeah.
To it's like putting out fires, isn't it?
Yeah, that's yesterday was fire central. I mean, in the end, I've run books of real money for various hedge funds and people over the years. Never have I I've never ever owned a stock that filed for bankruptcy. And it was a really, really interesting learning experience for all the people that follow me in my Substack, because, in fact, it's been a baptism of fire. So, Laser, ticker LAZR, Luminar, they are one of the original LiDAR companies. They had a big contract with Volvo. They used to have contracts with Tesla. The CEO was very outspoken. Famously, his house was worth more than the market cap of the company.
What's the ticker, sorry?
LAZR.
LAZ.
And they used to trade
Luminar.
Luminar, yeah,
right.
yeah.
Got it.
They used to trade at around $70 a share.
Oh.
And they've been absolutely slaughtered for years and years and years because they've got way too much debt. They were $70 million worth of debt on the balance sheet and a market cap which is a fraction of that. And they've lost the other day they lost Volvo. They had a dispute with them. That was a huge hit for them. They're trying to renegotiate their debt. And yesterday they came out and said they were doing a voluntary Chapter 11, which is essentially a court-supervised asset sale, which, as far as bankruptcies go, this is really interesting.
Yeah, it reminds me of a couple from last year.
You've seen this from Hertz and Bed Bath & Beyond, where there's voluntary. There are assets to sell. They're selling a $110 million asset to quantum computing, for example. And it keeps trading, and there's still 35% short interest, and you can see massive moves in the stock after the Chapter 11. I mean, Hertz is a great example. That was when was that? No, it was a lot longer than that ago. It was back in 2021.
Or was it? Because this was part of the meme craze, wasn't it?
Go back to 2021, or where?
Oh, I don't.
Can you do that on your chart?
No, because it then relisted, didn't it? So that I don't think
maybe
the chart's
not. Okay,
gone
so
back.
anyway, Hertz was in a similar situation, albeit different because they've probably got a lot more assets.
Yeah.
But the stock then went up 3,000% in a week after filing for bankruptcy. So who knows what's going to happen with laser? I had to cut my risk. I was down 55% on the position. But it was a great example of position sizing, right?
Yeah.
I had $250,000, which is about 2% of the book. And as a result of that position size, I'm prepared for a 20-30% move in a stock against me. Don't really want a 40-50% move, but if it happens, you live to fight another day.
Yeah.
And that's exactly what happened. But it wasn't just that. I had a few other fires to put out yesterday too. Only small ones.
It's funny how things all come at once, isn't it? Because that just, the initial knock, you've got to be very careful. The worst thing that can happen is when you get pummeled like that, is to then have 3 days in a row of negative.
Yeah, because then you're really in a lot of trouble.
Yeah.
Hence, and I've seen this all before, as you know. So I had 13 line items. I cut it down to 10 immediately. Took out the high beta stuff. Reduced some high beta stuff, took out another line item, reduced my shorts, just made the book a lot more simple. I kept in the stuff that I'm that's like Diageo and Novo that's going to actually move against a falling market.
Yeah.
Got a small short, but the book's now under control, and I'm hoping to be able to recover this. There's the nice little situations lined up into Christmas now, I hope.
Take us through how a book acts as one animal. It might have constituents of 25 positions, but it's incredible the way you can feel how you're set up from the way it's acting.
Exactly. I mean, and recently has been a wonderful example of that. Ever since I started this Substack, it's been such a good opportunity to teach people because the environment has been really interesting. I've had this QQQ short on, right? And it started off as a hedge, and then it always is a hedge, but that's exactly how the market has been, right? And I haven't lent enough into the consumer stuff. I should have, with the benefit of hindsight, my idea was spot on, but I didn't lean enough into it, right? I've got my Pfizer, which is my pharmaceutical. I've got my QQQ short, that's all good. I've got my, I dipped in and out of Target and Chipotle, but I had some spicy stuff in there as well, which was quite high beta tech stuff. Some of which has held up and been okay, but in a perfect world, you would have been short QQQ and just long a bunch of US consumer stocks. Yeah. And that would be the perfect hedge, and it'd be the perfect book. Obviously, none of us live in a world of perfect hindsight, but when the market is under a lot of pressure and all the usual suspects are getting hit hard, and your book is flat or up, which has been the case on many days during this last couple of weeks. Yeah. And it's just vibing. You just you look at Pfizer, it's up 2.5%, and you look at whatever tech stock, and that's down 2.5%, and you're just like, that's just nirvana.
It is, and it's incredible because then that doesn't stop that day. It extends the next day. And you just have to ride that wave, don't you?
Yeah, exactly. And even if you can nail it within the same sector, I had a day the other day, I was short the NASDAQ, QQQ, and I was long Adobe. QQQ, everything in the NASDAQ was down, and Adobe was up 3%. Yeah. And that was just, those hedged and positions are just nirvana, right? It just feels great when you do that. But it's been tough, right? It's a tough market, and you can't just be long all one thing. You can't have all your risk in apparel or whatever it is. You've got to have a hedged, properly risk-adjusted, diverse book. But I've had to do some serious risk management and thin it all down.
And that's the discipline that keeps that performance over the medium term, isn't it?
Yeah, exactly. I mean, if I drop below 500k P&L, I have to just cut everything and get things right under control again.
Right, we are going to go to a quick 2-minute break. Join us. If you're on the TikTok, come across to YouTube because we have got questions coming in, and join us, the community there. It is Trade Live with IG on YouTube. So TikTok, move across, come join the conversation. Let's have a quick look at the futures here before we go. They are coming off again. 6803. for the S&P. That's down 20 bips. The Tech 100, that is NASDAQ, down 33 basis points, back below that 25,000 level in the futures. And gold, 4305, now unchanged on the day. Bitcoin just getting its head back above water after a horrific day yesterday. We're going to be talking about all of those and go stock by stock through Piers' portfolio and the big stocks that we normally talk about each morning. In 2 minutes, join us then and later on for the US Open Live with Trade Live with IG. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments like shares, indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Not a surprise.
Good stuff. Right, we're going to look at the single stocks that we normally talk about, and especially important at the moment because it really is a rotation, isn't it? It's not often you get this. The market tends to trend one way or the other, but at the moment, it's rotating.
It is, and when it's sometimes these rotations, the US market is a perfect beast right? It's unlike
Much like yourself, Piers.
unlike any other market. It's the reason why it's the king of markets is because it's got the liquidity, it's got the depth, it's got the breadth, it's got everything, and it rotates perfectly. And one of these big old salty, intelligent and experienced but salty old bears, a guy called Jason Worstel, who you probably know exactly.
Jeez.
He used to run $2 billion at Morgan Stanley on the prop desk when prop desks were a thing. Great trader, smart guy, lovely guy. But, you know, one of these people, you ask him about the market and he thinks that it's going to hell at all times. But he said to me, you know what, we talk about rotation. I said, it just keeps rotating and rotating. He goes, yeah, but you know what happens when things stop rotating, right? They fall over. Okay, mate. But the thing is that it doesn't stop. Okay, the only time it stops rotating, it's an amazing thing because it's also computerized now. It's either rotating, and therefore there's always pockets to pick up the slack. And obviously, when tech is being sold, it has more of an impact on the market cap weighted index.
Well, just explain why that is.
Yeah, well, of course. So if you look at this is why the equal weight S&P has become such a focal point for professional money managers right now, because all the noise that goes with the S&P and the Nasdaq, which are market cap weighted indexes, in other words, Mag 7, that make up 45% of the S&P, even though that's only 7 stocks in a 500 stock index, that has obviously a huge impact on the index itself. So it's not a particularly fair indication of how the actual entire index is going. If you look at the equal weight S&P, where every stock is given a 1-for-1 contribution to the index.
Look at that.
That is trading at an all-time high. And that is an indication of the breadth that we've seen in this market and how we've diversified away from all the Mag 7 stuff into the banks, you know, and all the cyclicals and the pharmaceuticals and the small caps and all the other stocks that make up the other 493 stocks in the S&P.
Look at the way it bounced perfectly off that 100-day as well back in the 20th of November.
Yeah, and by the way, you ask. One of I always refer to Martin Malone. You know exactly who he is. One of the smartest minds that I've ever come across in the world of markets. And he used to just send me a picture of the S&P. He goes and just go, my favorite chart of all time, the S&P. And because the S&P, it's almost impossible to beat the S&P as a fund manager. And anyone who thinks that it's going to go, that guy Chris Wood, who made himself famous at CLSA with Greed and Fear newsletter, who's now at Jefferies, I think, and he's a very smart guy, but he's a classic example of the old school, who, you know, he came out with that comment when Trump did the tariffs in April saying, we have seen the all-time highs for the US market. And I was like, oh my God, mate, you're asking for trouble saying that. What an extraordinary thing to say. So since the dawn of time, it's gone up 7% a year, but you're telling me it's just going to stop now.
Yeah. It's at its highest.
Extraordinary. Can I just quickly take this phone call?
That's absolutely. That takes us on to how do you think the S&P will finish today? Will it be higher? Will it be lower? Or it's going to be a choppy ride? That is the poll, the first poll of the day. We got 47 votes in so far. So if you go to YouTube, tell us what you're thinking. So far, it looks either bullish or it's going to be a choppy ride. Also, while you're there, give us a little thumbs up on the YouTube. Give us a like. And if you don't currently subscribe to the channel. That would be much appreciated. Right, let's just look more into, you were talking about Abercrombie, American Eagle. These retailers have really benefited.
The apparel names have benefited from two things, and I'm going to go with just the thing that I always go on about, which is the positioning. If you rewind the clock, I mean, can we bring up a chart of
Abercrombie?
American Eagle to start with?
Okay.
Ticker AEO, full cocoa, as my crew would say.
Why is that?
We had this guy who came into my Substack, and he was one of these people that likes to sort of go off piste and sort of thinks that he knows better than everyone. So he just cherry picked 2 of the ideas and put all of his book into these very, very highly speculative stocks. Lost a bunch, blamed it on me, exited the chat, and then went on to TikTok and gave me a hard time on TikTok. So now we have a saying.
Is that Jesus?
No, there was 2. There's one guy called Jesus and one guy called Coco. But now there's a saying: if anyone wants to go off piste and go all into something, they just go, I'm going to go full Coco.
Right. Gotcha.
Anyway,
right.
Where are we? So we started to have a chart.
American Eagle.
American Eagle. Yep. There we go. Okay. Wow. There we go. What's the time frame on that?
That is incredible. That goes back to July.
So what's the time frame on that? Sorry, back to July.
Yeah.
Okay. So we've got 6 months of the chart of American Eagle. Massive gap up, followed by the momentum continues. I'm using this as an example. There's about 4 of them. This is probably the top one. Obviously, Sydney Sweeney has done wonders for their marketing campaign.
She's in London, actually.
Yeah, and don't we love her? She's just flying the flag. This stock is the poster child, if you will, of the apparel names in the US, and the very clear. Bearing in mind this Abercrombie, Gap, Victoria's Secret in particular, all of these names have had really tough time over the space of a decade. Abercrombie basically almost went bust and has had the most incredible resurrection.
Yeah.
Victoria's Secret almost the same, and for very similar reasons, by the way. Those two companies became socially unacceptable marketing campaigns, CEO scandals, and of course it became unacceptable to have the Victoria's Secret Angels, which we can get into some other time. But they've resurrected the brand, and they've resurrected the image and the social acceptability. And look at that move, by the way.
But I tell you, it was the most obvious thing in the world up here.
To do what? To short it?
Yes.
Yeah. Well, that's true. But this is why people should not be so obsessed with tech and Mag 7. There's so many things to trade.
You could go into a store,
move, by the way.
And you could basically go into a store and just see, would I buy anything? Would I buy anything for myself?
Yeah.
Would I buy anything for my kids? And you can tell when it...
This is your favourite subject, by the way. Rich goes around to stores and reports back, there's a bit too many on the shelf.
Do you remember Tommy Hilfiger?
Yeah, I do, yeah.
We had a full-on argument over
PVH. PVH, and then it went up miles, yeah. That was good.
And
by the
you'll
way,
see, I'm now representing.
Lululemon need to be mentioned because the Jefferies analyst went into the stores about, I think it was like 9 months ago, and he wrote a report, exactly I thought of you, saying that their black leggings, which was their marquee, their top-selling product, were just stacking up on the shelves. And Lululemon have had a massive fall from grace, which actually makes me happy because I've been trying to short this thing for years.
Yeah,
and of course, I made no money out of it because it's always been expensive. It's kind of almost been valued like a tech stock. And so that's a good chart of Lululemon.
Yeah.
Is that it? Yeah.
Yeah, that's Lululemon.
So we had massive rally followed by another massive rally and got sucked into that first short. And then it's obviously had, but look at this, and I'm warming up to this, and I'll tell you why. This is I just did work on this this morning. I did an educational piece. It's cheap for the first time ever, 13 times forward. Positive free cash flow. The CEO needed to go, and he's going.
Yep.
The Chip Wilson, the founder, he famously called him out.
The Canadian.
Called him Canadian, who doesn't sit on the board.
Yeah.
By the way, and has no.
Well, they private eggs or the ones who came to invest in it just said no, he's got to go because of the comments he made.
Yeah. So he's quite an outspoken bloke, and he went after the CEO of this company, who quite frankly needs to go. But look at the stock reaction to the announcement that he's going.
Do you think this is a turnaround? Because something like an Aloe.
But it's listen. All I'm saying is that the positioning is onside, the rotation is onside because this is smack bang in the middle of where the market's rotating. The CEO needed to go, but has the business changed much? No. So you've got two forces fighting against each other. The lack of fundamental growth, but the fact that the market is probably going to keep buying it in expectation of that, especially because everyone's so underweight Lululemon.
Okay.
So I'm warming up to it, but I haven't pulled the trigger.
Well, I was going to say, am I pulling the trigger on this now, or is this?
Look at that. Listen, the 200. You can't see the 200-day on there, but it's about 220, I think. 200-day.
Yeah.
You won't. The chart's not going to show you.
Be because
I've actually got a picture of it right here.
The 100 is at 179. So, but I just worry that the brand Aloe is really taken from them. It's better, it's cheaper, and it's a lot of hype right now. So
yeah, listen, I don't love the product, I don't love the business, and I sure as hell don't like going long the stock. But you can't put emotions into it, and it has grabbed my attention on a number of levels, and I'm considering it.
Okay, let's move on. What on earth happened to Broadcom?
Well, they just were subject to. I mean, look. First of all, look at the chart of Broadcom. Right, it's gone completely parabolic for God knows how long. And it's about time that it just had a bit of a sell-off.
Okay, so it was
Bearing
too
in mind,
high
it
going in.
coincided, listen, it was exactly the same as Nvidia, just a little bit more aggressive, right? The numbers were good, but the expectations were incredibly high. Plus, remember, they had a 14% rally into the print. That bit there is that Amazon news, not Amazon, sorry, Microsoft news. Microsoft are giving them the custom chip deal over Marvell, and the stock went up 13% in 2 days. So essentially, all it's done is just go back to before that news, which is nothing.
So
What would be more interesting is if it breaks down further.
this is the Google news as well.
There's Google news on
Alphabet, were starting to do the TPUs.
Yeah, but no.
What was that day?
No, but so there's that in there as well. Correct.
Yeah.
That's quite right. But I think that was that first spike, then it came back. The Broadcom, let's remember everyone, Broadcom are actually the people that help Google make their TPUs. They're in bed with Google. They are part of the same equation. So that's also fed into it. So there's a lot going right for Broadcom.
Oversold?
On a 4-day RSI, maybe. I'm considering buying it for a little trade, but I'm also.
Well, I'm going to front run you.
Yeah, I think we're close. But
Right. 50 shares to buy, 33679.
There we go.
I am in on that one.
He's in. There we go, guys. This is it. We're buying it live on TV. Broadcom is in.
Right, and am I hedging that with the Nasdaq? Do I put a QQQ short on against that, or do I let it run?
Can I just quickly look at the Nasdaq? I can tell where it is by my position more than where it's actually trading. I think that you need to. Listen. I think that it's just a bit of a tricky one. I think that Broadcom might have another. It's very hard to tell what happens at this level. I want to jump in and buy it because it's such a high quality company and the numbers were great. But I also am just quite wary of.
Okay, I'm going to put an Irish stop on it.
Just a little bit, an Irish stop. Yeah.
Tree.
There he is.
So there's the stop.
Just put a stop. Don't worry about the hedge.
Yeah. Okay, stop rather than hedge. We're going for. Right. So that's Broadcom, but that wasn't the start of the rotation. The rotation's already been in motion.
This is well and truly into the rotation. Also, that day in particular was a big rotation. And I think Broadcom, the reaction to Broadcom, quite possibly fed into the rotation, and increased the animal spirits towards the other side of the equation.
Yeah.
But it's the $1 million question as to when does the rotation continue for months to come into 2026 and beyond, or not beyond, and because a lot of this stuff that's being rotated into, you've got to remember these banks are now really high. Like Goldman's trading on pre-2008 crisis valuations.
Tell me what a voice of experience like yourself looks at to gauge positioning and get an idea of where
Great
we are.
question, by the way. And it's one that everyone wants to know the answer to. And it's more of an art. It is an art, most definitely not a science, because you can take in all the inputs.
If only there was a podcast called The Art of Investing.
Let's just take the Bank of America positioning data from today as an example and feed that into what I'm about to say. There's plenty of positioning data that comes out almost on a daily basis if you really want to go and hunt for it. It's very noisy. It's often quite contradictory. But the Bank of America guys are pretty good at it. One of the only things that we'll get to Michael Hartnett in a bit, but his bull bear indicator, his sentiment indicator, and his comments, and as a house, their comments on the cash positions coming down. So that part of the equation, in terms of where people are officially positioned, is obviously taken into account. But for me, it's more of it's done over a longer period of time. I like to watch these things get bought and bought and bought, and the analysts climb all over the top of each other. And then when you get to that point where you'll see 5 or 6 analysts upgrade a stock for no reason whatsoever in the space of a week, and that'll be usually 6 to maybe even 9 or maybe even 12 months into the trade.
Right.
That's how far I like to get into the trade before you can genuinely say that people are long. Right? It's all well and good to look at some of these things that people have rotated into in the stock, but no one's long. Micron is a great example. Micron has had a ridiculously big move, and you could be easily forgiven for thinking that that's a crowded stock. But that has come from such an underweight position that would take a year plus to become crowded in the sense of the crowded that I'm talking about.
Yeah,
I don't
so
like,
get
the only situations I care about, the crowded situations, are when they're aggressively crowded. Because otherwise you can't really say that it's going to do anything.
Is that when it's a retail love?
Often that gets thrown into it at the end, right? When retail only get interested in stocks in general. And by the way, that's not true. The Apex Army are massively into stocks that are beaten up. And quite frankly, there's lots of people out there in the universe of retail who do think.
The Apex Army are special, though, aren't they?
They are very special. They're actually incredibly smart bunch of people. But let's take retail en masse. They only buy stocks that are trending and that they're getting fed from algorithms, from social media and whatever it may be. They're not so, and that happens towards the end of the trade. Mm-hmm. So and it's actually my brother actually has an algorithm built specifically on this, but even more aggressive. Like when you get to a position in a stock, when you think that is 100% a sell, he's got an algo that uses very short-dated options that makes 500-600% in a day, and it's incredible how the win rate. But I use it as a contraindicator, so yeah. I'm very happy you can take the options win, but I know that that's close to getting sold now.
Yes,
it's actually really interesting. But Micron has had an enormous re-rating and it's right there.
It is, yeah.
But it's still not crowded. And why is it not crowded? Because this only really started about 5 months ago.
Now, you talk often about a VIP list. Who's invited to the party? Is Micron in the party?
No, they're getting close to it, though. They're getting really close to it.
Because Oracle got rejected at the door and told, go do what?
I think Oracle not only didn't make it to the party, but they've actually been drowned in the swimming pool next door. Literally, what a fall from grace. It's extraordinary.
It's become the poster boy of...
Yeah, and do you know what? Fair enough. That cash flow number was shocking. Right? You can't, and this is a great example of why debt matters. Look at Laser. They just filed for bankruptcy, and you've got to respect the debt, you've got to respect the balance sheet, you've got to respect the CDS. Mm-hmm. Why does Plug trade badly? Why do all these companies trade badly? Because of the debt. If you get too much debt, just like a person, you eventually drown, right?
Are the debt markets smarter than equities, or are they just less optimistic and more realistic?
Those two words. Debt markets are by nature bearish and at the more academic end of the equation for good reason.
Because obviously all you care about is, am I going to get my money back?
Yeah, it's quite straightforward. I mean, listen, fixed income is a much smarter group of people in general. No, not in general, full stop, than equities, right? And equity prices can dislocate from the balance sheet for extended periods of time. But one thing that is a fact, and this is why people like Warren Buffett ultimately will be right, even though they'll miss years of upside in something, is that at the end of the day, once all of the meme stocks trading's done and all of this Reddit nonsense is done, a company's fundamentals will matter. And if they have loads of debt and a struggling balance sheet that's going in the wrong direction, they'll end up down at zero. And Laser is a wonderful example. They were one of the hottest stocks in the market. Full stop. When they were at $70 a share. There's plenty of examples.
Jeez.
But the balance sheet is the be all and end all, and we're being shown that right now in one of the world's biggest companies, Oracle.
Yeah. Right, we're going to take a 1 minute break this time, and we're going to be back looking at the analyst
James Dalton.
The analyst calls, right? What are these analyst calls? They come out with their strategy pieces for 2026. Let's look back at how they did in 2025 and years before that. See if they're worth listening to at all. Join us in 1 minute when we're going to be taking about 9 minutes to look at that. And then we bring in the US Open when we're going to be looking at Broadcom, Oracle, S&P 500, NASDAQ, and the way the currencies are reacting to today's non-farm payrolls, which came in, arguably, Goldilocks. We'll see you in 1 minute.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. Every Monday I break down a carefully selected trade setup live in my Trade of the Week. Whether you're new to trading or have years of experience, Trade of the Week will help you to generate powerful trade ideas and execute them with precision using stop losses and profit targets. So if you're looking to enhance your skills and boost your confidence in the markets, join me every Monday for my Trade of the Week live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back, everybody. So we've got around 10 minutes before the US Open. We're going to have a look at the analyst targets from last year. How did they get on? Let's grade them, peers.
And yes, we'll talk about OKLO in a minute, guys. Right, so
there we go.
From last year. Well, can we just, should we talk about these, should we take this opportunity to just quickly share with the people who are watching the world of bank strategists? Can we?
Oh, I know how you love the bank strategist.
Yes.
What do you think?
It's a subject that is close to my heart, and in the fact that it's just a source of deep frustration, I suppose, is a good way to put it. But it's part of the game. But I just think that it's important for people to note, right? Because it's not a black and white subject. But if you average out all of those people in that list, that they come up with a number each year for an S&P target, which is usually somewhat in line with what it is. But what I think that needs to be noted is that some of the biggest and most celebrated and certainly highest paid analysts, strategists in the world, namely Morgan Stanley's Mike Wilson, JP Morgan, ex-JP Morgan's Marko Kolonovic, and Bank of America's Michael Hartnett. All three of these people, let me be clear about this, are highly intelligent guys who have done 30 years plus in the business.
Yeah.
And as such, I have a lot of respect for them. However, I think it needs to be noted that first of all, Marcos doesn't work for JP Morgan anymore because he was just, I mean, who knows why he left, but I think it was...
Well, it had something to do with the massive bearish call.
When you're telling the market to sell the NASDAQ and S&P from September 2022 for 2.5 years consistently, and you're 58% offside on your call in an index, it's probably time for you to move on, and it's probably time for you to admit that you don't know what moves the market anymore. And the same can be said for a lot of these guys. And I think the major point, putting aside the fact that Mike Wilson, Hartnett, and Kolonovich all called the market down for 2.5 years straight without changing their call, Hartnett gets away with it because he keeps doing trading calls in between. But trust me, every single opportunity he had, he said sell, sell, sell. And they couldn't possibly have been more wrong. And why is that? Why are guys who are that smart and that experienced calling the market so drastically wrong for such a long period of time?
Because the market's wrong.
Well, it's not. The market is what the market is. I think people get too emotional about it. I used to, but you have to readjust the way you think about it. QE changed everything. Big tech changed everything. Algorithms changed everything.
Definitely. And retail.
And then the final piece of that puzzle is retail. So you can't be Mike Wilson talking about the equity risk premium and the earnings yield. That's a conversation from 1988. It's not a conversation for 2015, when we're just in the thick of QE, when rates are being artificially forced low. And you and I have argued about it for God knows how long, mate. But the difference between them and you is that you've adapted, and you're a good trader, and you've been able to make money out of it, and you've been able to, as much as you want the market to go down based on everything that you know, you're willing to accept that it's going to go higher, and you don't just stick to saying it's going to get hammered all the time.
So to summarize, is it liquidity from central banks and from and then leverage from debt? You've had liquidity and leverage like never before, it feels.
Yeah.
And being a bear in that kind of backdrop, you're onto a loser.
I think there's a whole bunch of things to consider. First of all, if you rewind the clock to the 80s and 90s, look where interest rates were, right? The 10-year yield, if it moves fast, that's not a good thing.
No.
But if it's hovering around 4.2, 4.5, 5, 6 even, if it got to 6 in a hurry, the market would absolutely collapse on a short-term basis. But the absolute number's not that big. Definitely not. We used to be at 17% interest rates.
Yeah.
And people forget about that. Obviously, that number would be, given the leverage in the world right now, would be somewhat of a utter disaster. But rates have been structurally built lower now, and QE is a massive part of that. Martin used to say to me, "It's permanent and it's powerful." And
he wasn't wrong.
And he was spot on. And so many smart, really experienced old salty dogs were like, he's wrong, this is the most fake money ever, the world's going to implode.
Well, let's look at the story of this year, right? And this tells us earnings, earnings, earnings. You can see there that the yellow line were earnings expectations for this year. Of course, April sent them lower from a 275 estimate to 270. But look at from June onwards. We are going to end up, and this is, forward EPS, so expectations for next year. We're looking at $306 EPS estimate for next year. Is that what is going to take us higher with all these projections? Because then if we go to the projections of where we expect, chart off guys, I'll just find this, where we expect next year's earnings to be, then, next year's target, then you're looking high, aren't you? You're looking up towards 7,900. There we go. There's the dark navy estimate for the S&P 500, 7,968.
I think that as crazy as it might seem, I think that the EPS estimates obviously have become very high, and it's amazing when you look at that chart that you set up before. And it's a stark reminder to everyone about what really drives equity prices. And those earnings estimates are almost bang in line with the S&P 500. But that number, that 2026 number, listen, as crazy as it may seem, because we talk about the bull market starting 3 years ago, but these days that doesn't really mean anything. We don't really have bear markets anymore, right? Markets get crushed for whatever reason it may be, COVID or Trump or whatever it is, and then if it's an economic problem, they'll fix it with QE, and if it's another problem, and then back up we go. We don't have these extended cyclical bear markets, and a lot of that's to do with the companies that lead this market. But productivity gains, there's so many different aspects to it. But I think that my only concern with this is that the consensus that's built behind it.
Yes.
And as we all know, I don't like consensus very much. Not saying 2026 may well start off looking quite rosy, but I have a feeling that mainly based on my experience with everyone saying the same thing, it very rarely turns out that way.
Yeah.
I think we've got some surprises in store in 2026. And you never know what they're going to be. It could be the Chinese trying to revalue their currency up 25%. I was talking about today, which is an extraordinary situation. Goldman was saying it's 25% undervalued, and the Chinese, I've never heard the Chinese publicly say that they're going to try and appreciate their currency. So, and if you look at the purchasing power parity of the yuan, and you look at the economic fundamentals of the yuan versus the US, it's perfectly, it's rational. It's possible that they could accelerate, and that would obviously have inflationary impacts and various other impacts around the world. Who knows what it's going to be? We all know what happened in August 2015 when the Chinese devalued their currency.
Is this what we're talking about here? The
yeah, well, that's that's the currency now. Yeah.
So
what's that? A year?
Would be, yeah. Let's go. But
so the currency's gone through that 7 level, which is where it's defended. That's a key psychological level and a physical level where they usually listen. It's usually within 6 or 7, right? And approximately. And it's been slowly devaluing over the last few years. And the Chinese, I haven't had a conversation about the Chinese openly wanting to appreciate their currency. What they want to do is they want to reduce trade tensions with the US.
Yeah. Right, we're fast getting towards that bell then. Piers, we are going to give you a bell to ring if...
Do we have one?
The producer has. What's he done with the bells? Have they gone? Where's our... Oh, we put it right in the front. Here we go. Right. Piers, go on. Take a Wall Street bull and ring that bell.
And we're open. So bad.
Right.
Here we go. Now, viewers, I need to look at my screen, so we're doing 2 things at once here.
So we're going to take you through the big movers to the upside. Let's start with it's PayPal. That's right. One of Piers's
go, baby, go.
Picks. PayPal.
I'm probably going to buy some more of this live on the show.
Right, well, you are looking at 61.50.
Oracle is green, which is good news. Listen, guys, one thing, just take the opportunity. I don't know how many people we're speaking to. Maybe producer Phil can tell us that in a minute. But the open of the US market is volatile 100% of the time. And it is relevant to how the day plays out about 30% of the time. So
well, let's look at the biggest losers so far. It's
Alphabet.
Alphabet down 1%.
Of course it is. I'm just so upset. I was short this stock, and for exactly the right reasons, because it's completely crowded and everyone's piled into it, and it's just crazy. And it's just a beautiful little ticker. It's been ticking lower. It'll go through 300, and I'll be very upset because I'm no longer short. But I've got the QQQ. There we go.
The oil names: Exxon, Chevron down 1%. We've got IBM down 1%. A lot of focus there at the weekend. Notice your video there.
Yep.
Broadcom 330.
Luma. Sorry, there she is.
Broadcom just going blue on the day after we bought it live on air at 3:36.
There he is.
Now trading 341.
What else?
That's a quick couple of $100.
OKLO, there we go. I mean, someone made a mention, panicking as usual, about OKLO's price action pre-market, which is obviously irrelevant. Now it's up. I think today could be a good day for the book. Exciting. I can feel optimism.
342 Broadcom. We are seeing this move get bought from the open. What else do we have on the upside? We got Walt Disney.
Look at tech and Intel. I bought Intel back. That's what I did. And it's the first time I've been long Intel since I obviously loved it for months and months and months. In fact, years. And it had its big thing, and then I sold it, and I haven't touched it until yesterday. So I've got a small position in Intel.
Buying back in at 37.
Yes, sir. Isn't that interesting? So 40 was my level, step away. 3, 4, 5 weeks later, maybe more than that. I've got it. It's back in the book. It's small, but she's there.
Okay. What about these forgotten stocks? Disney, we see up 1%. McDonald's, never talked about, $320, up 40 bips in the day.
Disney's on my list of American titans, I like to call them. And at the beginning of the year, I had a list of. Gosh, that's bad. That's had a huge. So Disney's still on my list. So what is it? Disney, Pfizer, Boeing, Intel.
This is your watch list.
This is the big blue chip brand, American Titan brands who have all been in the doldrums for a long time, and one by one got their own little recovery stories going on. Disney's kind of one of them.
Is Nike one of them going into numbers?
Nike's the other one. No, I Nike for me was too low, down at 48 or 50, and now I'm just. They need to show us mate. They've got so much competition.
Palantir 183. I tell you what, let's have a look at what's going on with the indices then and the futures as we see this market struggle to gain any momentum. Yeah. It's down 20 basis points on the S&P 500, the same on the Nasdaq, and FTSE down 85 on the day.
Oracle,
gold is now motoring. Maybe I was too early to take off that call option. Thankfully, we kept.
Is it motoring?
$10 for 4,330 from 4,277.
Nailed that Pfizer sale. Love that.
Has it come off?
Yeah, beautiful stuff. So
can we just quickly show a picture of Piers in action as he was selling that Pfizer position? There he is.
What the hell is that? That is unreal. Where's that?
That's Jacob. If we have Jacob come in.
Jacob, go on there, mate. Here we go.
Jacob's special.
Has Jacob got that?
Why don't we get Jacob in to introduce him to the world, fresh off the train?
Here he is. And by the way, he's a hero for making it. Here he is.
Got your quadruple espresso.
Yeah. There he is.
We got that's from Tash and Jess. They brought us chocolates for you.
It's very kind.
Merry Christmas, Jacob.
Merry Christmas to you.
Good to meet you at last.
Yeah.
You too.
We're gonna do a chat afterwards, mate. He's a hero. He's an absolute hero. I love this. Anyway, Apex Army asked me about Pfizer.
Jacob, we asked a poll earlier. Is the S&P going to end up higher, lower, or it's going to be a choppy day today?
Well, listening to you this morning, I think it's been well absorbed. So I'm going to say it's going to be round about where sort of level where we've come in today. I think so.
Even. That's even. It sometimes hurts sittings on the fence. So I hope you're all right.
He's got his fence pants on.
Let's look at the result of the poll.
Well, Pfizer's getting. That was a sale. Thanks, man. You're a hero. Is this actually got anything in it?
No, it's not.
Right, we'll go and have a real coffee afterwards. This is good stuff, man.
At Pfizer on the 3-minute chart, then, as you can see why he's happy.
Good day. This is a strong day. That's what we wanted. Love that stuff. Pre-market just done. That's made my day.
But this is the volatility around numbers, isn't it?
And Oracle's ripping. This is going to be a big day. Excuse my excitement.
Well, Oracle is one that you have been trying to pick the low of, isn't that right?
Oracle has been one of the worst calls that but not nowhere near as bad as yours. Was you've been buying it from the highs, but I go down 50% on that chart, and that's where I started buying it. And there we are. Listen, I've had to deal with this cheers, mate. I've had to deal with this with my clients, who in the professional world long story short, this was a shocker, right? I should not have owned it into earnings. It is yet another example of why I don't like trading earnings, but that's okay because it's done. Now I'm focused on what's happening now, and I'm going to make. And this is not a revenge trade. This is simply me knowing that there's a lot of forced selling, there's a lot of emotion, and there's a lot of let's just stick with those two words thrown into this, and therefore it's overcooked. And I'm going to trade myself out of the hole that I'm in, and then I'm actually going to get rid of it because I think the investment grade rating is probably going to be taken from them, and whether it goes up on that or down on that, I don't know. That could be a kitchen sink moment for them. We'll see. Yeah, but this comes with a health warning. This stock, and I'm I'm not stuck in it. I'm there voluntarily.
Right, let's see how that Broadcom. Do we 347, $500 from trading live on the show in 10 minutes. Broadcom. Do
There
we
it is,
hold?
mate.
I got to take that. We will take that, or shall I take half? I'll take half off and run half. So we're taking $250 of profit there, running half. Also having a good day on gold. Piers,
Oracle's
what?
on fire.
Those stocks going higher, Oracle and Broadcom, that's going to give the Nasdaq relief, isn't it?
Well, it's not just them. It's the entire. It's a lot of this. Even the crap like OKLO, which I'm long, is nice. And listen, today's a bit of a stabilizer, but it makes sense. The market has been nervous. The market has been rotating, but we've just got, which you and I have just gone through those numbers, and we've come to the conclusion that it's a Goldilocks event. So of course, there's a bit of risk on today. And risk on doesn't mean apparel stocks and Pfizer.
Or FTSE.
Can't get over how good that sell was in Pfizer, by the way. Probably down 2.5% now.
I'm going to hear this for the rest of the afternoon. Please, thank God we've only got about 10 minutes left.
But it makes me happy because I'd be just so annoyed about that. Anyway, it's good, man. I think the market. Listen, we've now got that out of the way. We've got CPI on Thursday, which is going to be nowhere near as important as today, unless it's some crazy print. And then we have the Bank of Japan, which we've discussed ad nauseum on Friday. And we've been guided quite well, but that obviously we all know. I hope we all know by now that can be a massive risk event. UADA is very unlikely to do a hawkish hike. So I would imagine that we get through the week. The big day was today, I think, in terms of the big hurdle to get over.
Yeah.
And now we've got to remember that now volatility may well grind down to a low point, and we might get our Christmas rally. I'm prepared for anything. I've got my QQQ short.
Right, tell us what you think then. Let's see the chat, some of the comments coming through from that open. Rico Seagal saying, remember that first hour of Wall Street, just go for a shower. Go for a coffee. Is Nasdaq still easy for me to say, highly correlated to Bitcoin? Lord
PayPal. I need to
Master asks.
I'm going to buy some more PayPal right now.
Okay. Right, and take us through why.
Yeah. So let's talk about PayPal quickly. James Dalton. They are in the doldrums. They had. I've made three shocking calls in 2025. One was Laser, one was PayPal, and one was Oracle. Now I got hosed on PayPal because they had a beat and raise, a dividend installed, and they got the entire OpenAI payment ecosystem. It was up 17% on the back of all that. I thought they were going to kick on because they're so underweight. And they reversed aggressively and didn't stop reversing, some of which would be to do with crypto, but a lot of it's to do with the fact that the fundamentals of this company remain weak and everyone just kept downgrading it. Yesterday, they came out with the news that they have applied for a banking license. Now that puts them in the neobank category. Neobanks are SoFi, Robinhood, any of these fintech companies that are online companies that have a banking license as well. And it's usually well received because it increases their EPS, earnings per share, and it's a solid, reliable business. And needless to say, these guys have got the relationships to try and convert that nicely. So this stock needs some sort of catalyst. Whether this is it, I do not know, but I certainly know that it's completely on its knees, and I like the sound of it.
Is this a sleeper? Is this one that we're going to look back in February and it's going to be trading at 75? So up 23% from here?
I think so. I think that's why I'm so focused on it.
What's the downside? Because we always have to look at the risks.
The downside is that the payments industry continues to get steamrolled by other technologies. And
crypto?
No, I think. Well, I don't know. I don't want to comment on crypto, quite frankly. I have zero view. But PayPal, if the payments industry changes dramatically, and therefore their product becomes obsolete, then of course that's going to be one hell of a problem. But unless that happens, I just think that these guys have got enough of an ecosystem. They've got enough going on, and they have been. OpenAI might be a dirty word right now. but they're also a pretty significantly important company with a pretty significant ecosystem, and they've given the entire payments platform to PayPal. I love the fact that everyone hates it.
Yeah.
I love that. It's my favorite situation.
Does that come from your days at school? Or?
I don't know. We could go into that.
Maybe another time.
Maybe not today.
Talking about another time, Lee asking, are we doing this once a month, gents? Well, I'll tell you what, let's put that to a poll. Are you enjoying what you're hearing? Would you like a Piers and Rich duo in the afternoon? We got a poll up. Have you enjoyed today's NFP special? Yeah, do you want more? And I tell you what, send us an email as well. So the email address is going to be up on screen. Producer Phil's going to collate all of those, give them to our bosses who don't even know this is happening. Piers and I decided just to take over the studio and crack on. So we're going to report back. So if you could send us some emails, maybe give us a get out of jail free card, then we can show the bosses that you have enjoyed it. Would you like more of it? Because it was quite nice getting the tube in this morning at a normal time.
Buying 5,000 PayPal to add to the 5,000 I've already got.
See, I don't.
That's 10,000 PayPal.
I can't bring myself to do it.
But don't do it then. I'll do it. Just let me do it.
Yeah. You have a look at that one, and
$750,000 of PayPal done. And Oracle is red again. So here we go. The price action absolutely sucks in this market, and it's not just Oracle; it's everything. And rallies are getting sold. It's all over the shop. Question is, do we have one more flush out before we have a rally? I would imagine 61.99 is my price for paper. And the answer to that question is I don't know. As I said, I've got the QQQ hedge. It's not going anywhere. And I'm going to sit tight and just try and trade my way through the last couple of weeks in some of these old oversold situations. Nothing would surprise me though, mate.
Some people would argue that Friday's really the last trading day of the year with regards to liquidity because it's options expiry.
Then it becomes exactly right, and then you've got those couple of days before Christmas itself, which is kind of a non-event. And then you have the Santa rally, which is when it's very low participation. It can just grind higher, which is what the traditional rally is. Or it can just be all over the shop. So yeah. I don't know. There's nothing normal about this year. So anything could happen, quite frankly. What I would like to do is lock in my P&L between now and next Monday and then just not have too much to worry about.
I think that's it. It's taking risk down over Christmas. Let yourself have a break, because I will tell you what, there are going to be opportunities in January and February, and you need that rested mind. You'd be surprised how much of an underlying stress is going on in your body when you're running a portfolio which is a reasonable size over a long period of time. Yep. And all the greats that I used to work with back in my Brevin days, they used to have 2-3 weeks off completely.
Yeah.
Are you off anywhere for Christmas?
No, mate. I never take any time off anyway. But yeah, I mean, no, I'm here the whole time. Oh, God, that's such good news. Aluma. I'm not doing anything, mate. I'm at home. My wife and kids are going to Holland on Boxing Day, and I'm going to go and spend Boxing Day with my very old friend and client who's in town up in St John's Wood with his family and then I'll be just working. Apex trading, mate. It doesn't stop. If the market's trading, we're trading.
Big shout out to the Apex Army for joining us today. Big shout out to our Discord group with Maturin and my bestie Monkey Man, who's been with us since day one of Trade Live with IG, along with all the other usual crew. Thank you very much for joining us today. It's been hugely enjoyable. I am going to spend some of my profits there. And if you would be so good to give us a like. If you don't subscribe to the channel already, give us that subscription. Piers and I are going to go off and treat Jacob to a drink, are we?
We are. We're going to go and have a good chat with Jacob. I just want to say thank you to all of the Apex guys who have joined and for this long session. Lots of love, and anyone else who's new has been watching. I hope you enjoyed the show. Rich and I are going to try and do this on a more regular, scheduled basis, aren't we, mate?
We are allowed to. If the crowds deem it. This is a democracy after all, and some may want to vote you off.
Okay, let's see.
Thank you very much for joining us, and have a good rest of the afternoon. Best of luck, and remember, keep those books disciplined Don't get chased away on your risk taking, and we'll be back live tomorrow morning at 7:30 a.m. back to the usual time with myself and Angeline. Peace.